Hey, what's going on, everyone? Matthew from therighttrader.com back again with another stock price prediction and analysis for 2020. We're going to be talking about Disney today, which in the past was more of a blue chip stock, but however, now with its move into the streaming service, we've seen it almost become a bit of a hype stock. Now, of course, Disney is never going to be a stock that moves 10-20% every week, but it has become a more active stock, a little bit more volatile in a good way, and it actually allowed it to make some pretty big price improvements towards the upside. And I think that's a pattern that can continue. We're going to take a look at the chart in just a second here. But, it pays a nice dividend of 1.19%, and it reached a recent all-time high of $153.41. Currently at $145, so really we're, bouncing around $150 right now, which is a key level actually, so that's not something to ignore. And I'll talk about that in just a second. But also make sure to check out my previous videos on price predictions for stocks in 2020. I've already covered Facebook, Tesla, Apple, Netflix, and many more to come. Let me know if there's any in particular that you want to see in the description of this video. But talking about Disney here, what we're gonna try to see is where is it going to be heading in 2020, keeping in mind, like I said, that it has become a little bit more hyped of a stock, surprisingly, than a lot would have expected for Disney, and that's due to it trying to modernize itself and the success it's found in that and the attention it's gotten as well. Also, streaming sector is a very successful one in 2019, and I think we're going to see it continue to be a successful industry in 2020. In regards to the stock market specifically, right? Things like Netflix, Disney, etc. They've really caught a wave recently. So what I drew here is our long-term uptrend line, and these two yellow lines are actually the range that we were in for over 3 years, right? So since 2015 all the way to the beginning of 2019, we were range bound between $85 and $120, and that's a big deal, right? Because the only time that we were able to break out of this range, because we were really just bouncing up and down, price wasn't improving and wasn't really dropping, right? This is kind of what you would expect from a blue chip, stock that someone's grandparents would buy. Once they moved into the streaming service, we broke out of this range, which allowed us to get past that $120 resistance level, and we started our climb up to $150, which is kind of where we're sitting now, right? Of course, like I said, we have our long-term resistance, and I guess the all-time high resistance, I should say, that's at $153, and any move above that, any move above $150 really will signal a push to new all-time highs. I think that the next step is really $180, right? So that's going to be a key level that I'm going to talk about in just a second. Not much to say on the indicators here, but I will draw our secondary uptrend line, which is going to be this uptrend line right here. I think that we can hold this uptrend line for quite some time, actually. And of course, we got our really short-term uptrend line as well, which, unless we're able to get back above $150 very soon, we'll probably lose this uptrend line support and pull back to this one, which is completely fine. So I think that there's actually a pretty high chance of that happening. Kind of depend on what the market is going to do. If we're going to keep pushing higher and pumping higher, we could maybe get back above this and hold this uptrend line for now. Otherwise, we could actually fall back down a little bit, maybe retest this $120 level, because it does need to be retested. If we zoom in, we can actually see that we have not come back since the breakout to that $120 mark. So it would be a good thing to test out earlier, maybe in the next 2-3 months. That way that's out of the way, and we can actually move higher, make new all-time highs, instead of stretching this move out a little bit longer and then needing to come back down to close this gap. It's hard to say which one is going to come first. We need to see, there's no real way to predict that. But my best guess is that we're actually going to slow down here, maybe come back a little bit lower, and then see a rise a little bit after, towards mid-year. That's going to allow us to push to $180, which would be the price target for 2020. And can we get to $200 and above? I think that we can definitely test $200. We could stretch, to $210, $215 probably in a very bullish scenario. I definitely think that's possible, but $180 mark is a nice conservative but fair estimate for Disney, considering the hype factor and everything. And end of 2020, we really could be pushing $200, I think. As far as the bearish scenario, any move that would push us below this secondary uptrend line would really slow things down. Specifically, any move that drops us below $120 would likely put us back in this $85 to $120 range for quite some time, and that would really slow things down. It would just probably not crash or anything, right? This is Disney stock. You got to remember that. But we would just return to this range-bound kind of stale price action that we saw back here. With that being said, this is the end of this price prediction for Disney stock. Not financial advice, just my personal opinion. And also make sure to check out my technical analysis master course. It covers everything you got to know: how to spot trends, how to spot buying and selling opportunities, how to read candlesticks, risk management principles, advanced trading indicators. It's the ultimate guide to technical analysis. It combines all my years of experience put into one course, has over 15 videos, comes with a 30-day money-back guarantee, and it costs less than $20, which is nothing for a lifetime of knowledge. It's the price of a t-shirt. That being said, thanks for watching, everyone, and I'll see you next time.